there will come a point, I believe, where in a general currency collapse, real asset values will detach themselves from the declining value of money. In other words, you'll see property prices stabilize at some stage and then rise. They will fall very heavily in gold terms because under those circumstances, real money will be only available at huge premiums because there's not a lot of it compared with all the currency that is being destroyed. So I think, Daryl, the answer to your question is yes, I do see further substantial falls in stock markets because not only are we not done with the rise in government bond yields around the world, but they are going to rise considerably further, and that's going to create even more difficulties for governments whose budget deficits are going to increase very substantially as a result of the contraction of bank credit, which I think we've discussed before. Bank credit is what all GDP transactions are settled in. Therefore, when you see changes in GDP, it's not necessarily reflecting, improvements in the economy or recession, deterioration in the economic outlook, whatever it might be. No, what it's actually reflecting is the amount of credit deployed in the economy. And if the banks contract the amount of bank credit, bingo, you find GDP collapses. And this is what we now face because, as we've said many times before, the commercial banks are very highly leveraged. They now see the economic outlook as deteriorating quite rapidly. They cannot afford not to really rein in their loans to the private sector. And this is particularly small and medium-sized businesses who find that liquidity is just completely dries up. So what happens then is you find that businesses start going bust en masse. And it's not necessarily the big businesses who can rely on government contracts or whatever. Or you find the central bank turns around and says to the commercial banks, for goodness sake, you cannot foreclose on, I don't know, name any big business you like, from mining to manufacturing in your country. They will be lent on to keep the big businesses going. Okay, so if that's the case, I've got to close down everybody else because I'm over leveraged. My balance sheet, I've got to look after my shareholders. To hell with the regulator, I've got to look after my shareholders. And that's the position that bankers are rapidly getting themselves into. So we can see that with credit withdrawn from the economy, this is commercial bank credit being withdrawn from the economy, we face not only sharply rising prices as a result of the falling purchasing power of our currencies, but a falling GDP as well. Now, this is a lethal combination as far as the authorities are concerned, because this is reflected in rapidly increasing budget deficits, which have to be financed. Oh, but we've got a problem, Houston, because it's all very well saying that, we're going to need to borrow another $1 trillion or $2 trillion or $3 trillion or $4 trillion, whatever the figure is. But this is on rising bond yields. The market is not going to let us have this, to finance this at the levels to which we have become accustomed.
Alasdair Macleod, a major currency collapse could cause real assets, like property, to detach from the declining value of money. While property prices might stabilize and rise in nominal terms, they could fall sharply in gold terms as real money becomes scarce and commands huge premiums. He predicts further stock market drops, driven by rising bond yields and increasing government deficits. As banks cut back on credit due to over-leveraging, GDP will shrink, and small businesses will face liquidity crises, leading to mass bankruptcies. Meanwhile, governments struggling with soaring deficits will find it harder to borrow due to rising bond yields. Macleod warns of stagflation, a combination of falling GDP and rising prices, creating a severe crisis. He believes the only safe haven during such times is real money, like gold, as fiat currencies lose credibility and purchasing power.
So this is a situation which could begin to very rapidly deteriorate. And under those circumstances, I would not hold any equities, nor would I hold any fixed interest bonds. There is only one thing to do, and that is to try and get as much as you can out of the fiat currency paradigm and hold real money, which is metallic gold and silver. When it comes to the $50,000, I'd rather look at it differently from John in that respect. I think that has to be a guess on his part. It's sort of penciling in a number. But we know that the Americans are anti-gold and pro-dollar, and good reasons why they should be, because they've promoted it to be the world's reserve currency. Everything is traded in dollars. But the reason they will have to howl on gold is really very, very simple. With the dollar collapsing under what is sort of commonly termed hyperinflation, but I think a better description is just complete loss of credibility and purchasing power. Under those circumstances, the only way they can stabilize it would be to go back to accept that really is gold. And they need to anchor the dollar to gold. Mm-hmm. I think it's quite possible that you might see the dollar go down to the point where they're considerably more than 50,000 to an ounce of gold. I really don't know. I mean, that is ahead of us, but there are going to be extreme difficulties, I think, for the Western fiat money establishment, fiat currency establishment, extreme difficulties for them to accept the reality of the situation. And it's going to be different for different countries. I mean, Canada has sold all its gold, got none at all. Britain, under Gordon Brown, sold 2/3 of its gold, which wasn't very clever. And so far as I'm aware, the Treasury has made absolutely no attempt to recover any of the gold that it lost at under $300 an ounce, by the way. Mm. I mean, some countries, bizarrely, seem to have quite a lot of gold. I mean, places like Turkey, whose currency is collapsing. Yeah. And interestingly, going back to if you like, the Russia-China axis, I mean, if you look at who's actually been buying gold in the central banks, it's been predominantly, Shanghai Cooperation Organization members, also other members of the Eurasian Economic Union. If you take all those together, they've, accumulated far larger amounts of gold than any of what I would call the sort of either Western aligned or non-aligned nations' central banks. I think we're looking at something like over 4,000 tons as against 800 tons. This is quite an important signal, I think, that there's going to be a more ready acknowledgement and acceptance that currencies should be linked to gold in Asia than is likely in the West. But really, as to John's point about $50,000, I think that can only be sort of a pencil-in figure. I don't know whether he looked, say, at the quantity of money supply relative to gold ounces held by the US government. I mean, people do that sort of thing, but you can't, because for a start, the US government reserves haven't been audited, and B, really what you're looking at is a situation which is going to deteriorate from now. You can't really think in terms of, you can't really say, if the situation stopped now, then they would need to have so many, the price of gold would have to be whatever, because that's not happening. This is, we're getting a rapidly deteriorating and accelerating deteriorating condition for fiat currencies. So we cannot guess what the outcome will be in that sense. But what I can tell you is that they will have to go back to accepting that gold is money and all the rest is credit. And the only way to stop the collapse in the value of that credit is to anchor it to gold. How long that will take, what we will have to go through to get to that point, I have no idea. All I just know is it's going to be very, very difficult for us because we don't, our economic establishment just don't understand money.
Alasdair Macleod warns that the financial situation could rapidly deteriorate, making equities and bonds risky assets to hold. He advocates moving out of fiat currencies and into real money, gold and silver. He believes the dollar's collapse, driven by hyperinflation or a loss of credibility, could eventually force the U.S. to anchor the dollar to gold. While some speculate on gold reaching $50,000 an ounce, Macleod sees such figures as rough estimates, given the uncertainties. He notes the U.S. government's gold reserves are unaudited and emphasizes that the worsening fiat currency crisis will likely accelerate. He highlights a growing divide between the West and nations like Russia, China, and others in Asia, whose central banks have been heavily accused